Hello and welcome. Let's talk about one of the most unglamorous, but absolutely critical, topics in personal finance, the emergency fund. It's not as exciting as picking winning stocks or dreaming about early retirement. There are no get-rich-quick schemes here. But I can say this with total confidence, building a solid emergency fund is the single most important step you can take for your financial health and your peace of mind. Before you invest a single dollar in the stock market, before you even think about a Roth IRA, you need this foundation. Without it, your entire financial life is built on shaky ground. An emergency fund isn't an investment. It's insurance. It's your personal financial airbag. In this video, we're going to cover exactly what an emergency fund is, why it's non-negotiable, and a simple, stress-free plan to build yours, starting from zero. Let's begin. Part 1. What is an emergency fund? Defining true emergencies at its core. An emergency fund is a dedicated pile of cash, separate from your regular checking account, that is set aside specifically for unexpected, necessary, and urgent expenses. The key word here is emergency. It's crucial to define what qualifies, because it's very easy to dip into this fund for the wrong reasons. A true emergency is an unforeseen event that has a significant impact on your life or well-being. Let's look at some examples what an emergency fund is for. A major job loss. This is the classic example. Your emergency fund becomes your runway, covering rent, groceries, and utilities while you search for a new job. A medical or dental emergency. An unexpected trip to the a necessary dental procedure like a root canal or a high insurance deductible you suddenly have to meet. Urgent home repairs. Your water heater bursts, your furnace dies in the middle of winter, or a tree falls on your roof. These are not optional expenses. Critical car repairs. Your transmission fails, and you need your car to get to work. This isn't for new tires, it's for repairs that render the car undrivable. A true family emergency. Needing to book a last-minute flight for a serious family situation. What an emergency fund is not for. It is not for a vacation. It is not for holiday gifts. It is not for a to-pass-up sale on a new TV. It is not for a planned expense, like your annual car insurance payment. Think of it as a break glass in case of emergency fund. If it's not urgent, unexpected, and necessary, the glass stays intact. Part 2. Why it's your #1 rule for financial security. You might be thinking, I have a credit card for emergencies, or I could just sell some of my investments if I really needed to. This is where we see the true, profound value of having cash on hand. First, it prevents debt. Let's say your car transmission goes out, and it costs $1,000 to fix. If you don't have an emergency fund, you're putting that on a credit card with a 20% APR. Now, that $4,000 emergency could easily balloon into $5,000 or $6,000 by the time you pay it off, digging you into a very deep hole. Your emergency fund allows you to handle the crisis without going backwards financially. Second, and this is crucial for investors, it protects your long-term investments. Imagine the market is down 30%, like during the 2008 crisis or the COVID crash. At the exact same time, you lose your job. If your only source of cash is your brokerage account, you are forced to sell your stocks at a massive loss to pay your rent. You are locking in those losses and destroying your portfolio's ability to recover. An emergency fund acts as a buffer, allowing your investments to stay untouched and continue compounding through the market's recovery. This one function alone can save you hundreds of thousands of dollars over your lifetime. Finally, and perhaps most importantly, it provides incredible peace of mind. Money is a huge source of stress for most people. Knowing you have a financial cushion to handle life's inevitable surprises transforms your relationship with money. It reduces anxiety and allows you to make clear-headed decisions in a crisis, rather than panicked ones. That psychological security is priceless. Part 3. How to build your emergency fund. A step-by-step plan. Building this fund can feel like a huge mountain to climb, but the strategy is simple. The key is consistency, not speed. Step 1. Set your target. The general rule of thumb is to save 3 to 6 months' worth of your essential living expenses. What does that mean? It's not your full salary. It's the money you need to cover your absolute necessities if your income disappeared: rent or mortgage, utilities, groceries, insurance, and minimum debt payments. Start with a $1,000 mini goal to get an initial safety net in place. Then, work towards the full 3 to 6 month target. If your job is very stable, 3 months might be fine. If you're a contractor, self-employed, or in a volatile industry, aim for 6 months or more. Step 2. Choose the right home for your fund. This is critical. Your emergency fund is not for generating high returns. It's for safety and immediate access. It needs to be safe, liquid, and separate. Safe. The value shouldn't fluctuate. The stock market is not the place for this money. Liquid. You need to be able to get to it within a day or 2 without penalties. Separate. Keep it in a different bank than your main checking account to avoid temptation. The perfect vehicle for this is a high-yield savings account, or HISA. These are offered by online banks and typically pay a much higher interest rate than traditional brick-and-mortar bank savings accounts. Your money is FDIC insured, it's safe, it's liquid, and it's earning a little something while it sits there, fighting inflation. This is the modern, smart place for your emergency cash. Step 3. Fund it consistently. Treat your emergency fund like your most important bill. Set up an automatic transfer from your checking account to your HISA every single payday. Even if it's just $50 or $100, consistency is what will get you there. Any windfalls like a tax refund, a work bonus, or a cash gift, consider putting a chunk of it directly into this fund to give it a boost. The journey to a full emergency fund is a marathon, not a sprint. Celebrate the mini milestones, like hitting your first $1,000 or your first month of expenses saved. Every dollar you save is a brick in your financial fortress. A final word of wisdom to quickly recap. What is it? A dedicated cash reserve for true, unexpected financial emergencies. Why is it the #1 rule? It prevents debt, protects your long-term investments, and provides irreplaceable peace of mind. How do you build it? Determine a 3 to 6 month expense target, open a high-yield savings account HYSA, and fund it with automatic, consistent transfers. Your emergency fund is the foundation upon which all other financial success is built. It's what allows you to be a confident, long-term investor, because you know you can weather a storm without wrecking your future. It's the buffer between a minor setback and a major financial catastrophe. It's not sexy, but it is powerful. Start building yours today. Thank you for listening.